I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
You had one of our listeners ask, what about the relationship between the U.S. dollar and the price of gold? What kind of a relationship is there?
Well, that's what I wanted to talk about. That was a good subject, and I thought the question was appropriate, so I did want to address it. And in particular, I think what brought that up is that the dollar has been weak and gold has been weak, and the question became, well, how can they both go down together? And so I have some charts in front of me. I just kind of wanted to reference and walk through and show and talk about some of these relationships that are sometimes there and sometimes not. And you have to be real careful with some of these intermarket relationships. I mean, some things are concrete, like as interest rates go one direction, the bond prices go the other. I mean that's not an intermarket relationship. That's just a fact. Gold stocks tend to bottom typically ahead of the cycle in gold and tend to top first, and there's some relationships there that are, pretty much hardcore. But then some of the other market relationships, like, well, if the dollar goes up, crude oil has to go down, or vice versa. You got to be careful with those. And so it's those I wanted to talk about. And to start, I remember the late 90s buying gasoline for, I want to say it was around 70 cents a gallon. It was either in the high 60s or around 70 cents a gallon. It was in 98. But we would made a trip. We were in Texas, and gasoline got, I'm fairly certain, I think it was around 70 cents a gallon. And at that time, crude oil was around, I'm lying, not around, it was. It got as low as $10.35 a barrel, and that was in December of 98. So let's start there and kind of walk through. Like I said, I'm referencing charts, but at that time, in the late 1998 time frame, the dollar was trading in the mid to low 90s. Okay, and from there, the dollar went up. The dollar went up from the mid to low 90s to the high 1-teens, 112 to 119 range, in 2000. And during that time frame, well, crude oil went up too. It went from the $10.35 to $37.80 as a high. So they went up together. And, so again, that's just a perfect example that these relationships don't always hold. And then from that high point in crude oil at roughly 37.80, crude oil kind of flatlined and then worked its way down into 2001. People don't realize this, but in November of 2001, crude oil it made a low of $16.70. $16.70. And during that time, the dollar maintained in the mid 1-teens. Well, that doesn't, why? It doesn't, that where's the relationship? Well, it's not there. And then, from that point, crude oil started going up and the dollar started going down. And when you look at the chart, you can clearly see it. There's more of an inverse relationship. And so I think that's where this has come from. Since then, people think, oh, well, if this automatically is going up, then that's automatically going down. And sure enough, crude oil spiked from that point all the way up into 2008 at its high at whatever it was, 147 or 148. and the dollar made its low in 2008 right at 70. So there was a strong inverse relationship there, no question about it. And then since then, it's been kind of on and off. The dollar bounced, and crude oil collapsed. Well, crude oil collapsed all the way down out of that 2008 high, all the way down to $35. Well, the last time crude oil was at $35, the dollar was at, in the 115 to 120 range. But this time it was only in the 85 range. It only bounced to, 15 cents, if you will. So the point is, without just beating the numbers to death, is that you have to be careful. It's not a one-to-one relationship. It's more about, and the question the guy asked me said, well, how can this be? And it's more about, from my seat, the cycle. Where are you in the cycle? The cycles in oil are going up. They're going up. If they're going down, they're going down. Sometimes they're both going down. And when I say both, the cycles with oil and the dollar are going down together, and sometimes they're going up together. And I think where some of the confusion came is we fast forward, like I said, without beating this to death, but if you fast forward to 2016, we saw the dollar, is turned up into January of 17 this last year, and crude oil was also up during that time frame. Again, where's the relationship? And then since early this year, both have been, the general direction has been down. And so again, where's the relationship? So are the cycles changing? The relationship that began in 2000 and the correlation that held through, up until really this past year, is it changing, or is this an anomaly? I don't know. I let each of the markets stand on their own 2 feet, and I have been saying that the dollar had made a significant top, I think the 4-year cycle top, back in January. That's about to be tested. The dollar's in a position now where it's going to bounce. And crude oil, I've been saying that it would go lower. And so I think we have to let each market stand on its own 2 feet. I've spent too much time probably on crude oil. I want to fast forward and talk just a minute about the relationship, walk through the charts on gold as well.
And we'll talk about that right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're chatting with Tim Cycles Van Wood. So, Tim, you wanted to talk about gold and its relationship to the U.S. dollar.
Yeah, just to put some numbers on it, because, like I said, sometimes, there's myths about things, misconceptions, and I just want to clarify that. And a good starting point is back in, I got to put my glasses on, I'm getting where I can't see anymore. But back in 1995, the dollar was trading up around 1985. The dollar was trading up in the high 150s, 160 range. At that same time, for example, gold was in the high 200 to very low 300 range, 305 to 280 range. Okay. And from that high in 85 in the dollar started to collapse into a low in 1987 of around 85. So, that's a substantial move. It got cut basically in half, and gold went to the high 400s. I see a tick at 507. So it went from what, 300, right at 300, high 200s to right at 300. It rose $200 when the dollar got cut in half. And, from that point, if you look at it in the early 90s, the dollar pretty much flatlined right around that 85 mark. And, gold, it did nothing. It just kind of drifted back lower and into the low 300s actually, and pretty much stayed there, all the way into, the bottom in 2001 at, I think it was $252 an ounce as I recall. And, at that bottom, we had a high. Again, the dollar was at a high, so there, on one hand, appears to be a correlation because the dollar was at the high at 121, but before, in 1985, the dollar was at 170, and gold was at 300 in 1985. Why is it that when the dollar was at 120 in 2001, that gold was only again at $252 an ounce? So there's not necessarily a hardcore relationship there. And again, kind of like with crude oil and the dollar from that 2001 time frame, yes, there is more of an inverse relationship, no doubt about it. I mean, obviously gold's went up and obviously the dollar has come down. But in the last year or so, that correlation has kind of fallen apart. Again, it's not as strong of a correlation. And so I guess the point is, be careful with those correlations and let each market again stand on its own 2 feet. We have seen again, the dollar has been weak since the first of the year. We have seen a little bit of a bounce in gold, but overall, it's been weak. And that's because of the cycles, I think, and not because of an inverse relationship.
We'll have more with Tim Wood right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the Canadian dollar has been on a charge of late, and it seems it has separated itself a bit from the price of crude, which hasn't done much. But I'm wondering, is it so much that the Canadian dollar has gone up, or is it because the U.S. dollar has gone down?
Well, looking at the relationship while we were on the break, looking at the relationship with the Canadian dollar and the U.S. dollar, yes, there is an inverse relationship. Is it precise where there's just an immediate one turns, the other one turns? No, there's a little bit of a lull and lag, but the ebb and flow is pretty much an inverse relationship. And I think, looking at the charts, just overlaying them, that the advance in Canadian dollar, it made a low back in May, and has been, like you said, it's been strong since that low in May. But the dollar has been weak. So looking at the chart, I think that it's probably because of the weakening of the U.S. dollar and knowing that relationship.
The Canadian dollar also very closely tied to the price of crude. Do you see that changing?
Man, look, that is a strong relationship. In that case, it is amazing. There's a couple of examples where, for example, the top that was seen in the Canadian dollar in 2007, you didn't get the top in crude oil until 2008. But by and large, that is a strong correlation. The Canadian dollar and crude oil very strongly correlated. What I think is going on here is that we have seen a bounce in crude oil, by the way. Not much for one, but we have seen a little bit of a bounce in crude oil. But I think what we're seeing is that the bounce in the Canadian dollar is due to the weakness that we've seen in the U.S. dollar. The U.S. dollar is moving into a clustering of cycle lows that should be due very soon. And when I say very soon, I mean a few weeks to a month max. I mean, we should be up on it. And so from that point, I think the dollar is going to reverse. While I think there's a higher degree high in place in the dollar, I think there's a good advance coming. And so what that's telling me is that knowing the inverse relationship with the Canadian dollar is the Canadian dollar should weaken, and knowing the relationship between the Canadian dollar and crude oil, it tells me that crude oil should weaken. And that is exactly what I've been thinking about crude oil anyway, is that it would continue lower along with the price of gold because of the cycles, not because of the relationships there.
We did.
So what I'm saying, let me throw this out there. I don't mean to speak out of both sides of my mouth. What I'm saying is there is a strong correlation between the Canadian dollar and crude oil. There's a fairly strong correlation between the U.S. dollar and the Canadian dollar. And what I'm seeing in those relationships confirm or appear to be confirming what I'm seeing with the cycles. And the cyclical expectations are that crude oil and gold go lower. We've talked about that all year, and so far it has been on track.
Tim, I know you look at cycles and so on. Where do cryptocurrencies come into this, and have they started to replace gold as the place to gold if you're nervous about the markets?
You know, I don't have an answer to that. It's something that I have not, that's a rabbit hole I have not gone down. I go down a lot of rabbit holes, but that's one that I'm really not qualified to speak on. I don't know. I don't know.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Check out our YouTube channel, Talk Digital Network. If you have any questions for our guests or for the show, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.